So I'm seeing a lot of good signs: Fed activity, gold sales, numismatic sales, a little bit of mining stock sales, and the chatter around these industries that people are interested. And when you get general interest is when those markets really run. So I think we're officially into that third and final phase of the major gold bull run that we were going to have in this phase. And last thing I wanted to say, as we were kind of talking before the program, I was looking at CNBC, and there were two reports of two separate Fed governors saying we didn't lower enough, we need to be more aggressive. So I'm in some private real estate investment groups and they're panicking. Some of their commercial investments are not doing so hot. And all the projections they made about how much money they're going to make over the next 5 years, they make them because prices are going whoop. And rents are starting to fall for the first time in a long time. So again, a lot of those traditional investments are screaming recession. The Fed is telling you without telling you what's really going on. And there's a cliff coming when you're spending too much and the money you're printing does not cover as much because of inflation and nobody's buying your bonds and the central bank is monetizing it. That's where you get into a Weimar scenario.
You're watching CapitalCosm. My name is Danny. It is September 22nd, 2025, and my guest today is none other than Rob Kientz from the Freedom Report YouTube channel. Rob, thank you so much for coming back on the show, my friend.
Yeah, absolutely. Thanks for having me as a periodic guest on your channel. Love addressing your audience and appreciate being here. Thank you.
Yeah, man. I mean, you're a guest favorite, so you're a fan favorite, I should say. So it's always a pleasure having you on. Let's go ahead and dive right in. I'm looking at the charts here. Gold is going ballistic. Silver's going nuts. But what do you want to talk about, Rob? What's front and center in your crosshairs right now?
Well, gold has definitely been so hot, Danny, and it's been a while since really the stackers in the industry could get excited, or the mining investors. You know, it seems like it's just been a little bit of a rough ride, although the last year and a half has been great for gold. Now I think you're starting to see a little bit of generalist interest in it, primarily because the Fed interest rate decision last week to cut at their September meeting. It's just a quarter point. But they cut, and whenever you cut and you've got higher inflation rates and you have higher overall interest rates, and you have what looks like an oncoming recession, that tends to be very good for gold. So it doesn't surprise me gold's rising. Now, the funny thing is, I was just on another channel last week talking about how technically, if you look at the gold chart and you look at the technical indicators, the RSI and 200-day moving averages, it was overbought or oversubscribed, if you will. And that's because a lot of that gold price is determined on that paper trade, right? And so the paper traders look like they're, head over skis. But with that interest rate decision, it's bought gold new life, and it's going to continue to push it up, because when you have a drop in interest rates, it's usually a sign the economy needs help, and that's bullish for gold, and people are starting to move to gold. So you're starting to see some generalist investors interested in gold and gold stocks, which is a very positive sign. Of course, silver being solidly above $40. The thing about silver being above 40, traditionally silver's only hit 50 a couple times, and there's not a lot of trading range in there. And so there isn't a lot of technical resistance. So I could see silver running for a while. We could hit $50, $60 silver this year. Goldman updated the target to $4,000 gold. And I was reading some articles earlier. Some of the banks are coming out saying maybe $4,250 gold this year. Maybe we're looking at $50, $60 silver. So certainly there seems to be a lot of bullishness in the financial space about gold and silver, which is good. It's an indicator.
Is that didn't mean to interrupt. Is that by end of year or this time next year?
4,000 gold by end of year. And I think not a year from now, maybe in the next 4, 5, 6 months, they're expecting $50, $60, $70 silver is what some of the financial analysts are saying, not all of them. But the fact that you're seeing mainstream guys come out and really be bullish on both gold and silver at the same time is a sign that you're getting that generalist interest. And historically, when you get generalist interest, you get money flowing from other markets. And if you go to, for example, the guys at North Star Bad Charts, they talk about capital rotation all the time. They're starting to see capital rotation come out of stock market and other assets, real estate and things. And it's starting to find a couple of things. It's finding cryptos and it's finding gold and silver. And you're starting to see both of those markets, in different ways react. And overall, I think it's going to be a good, what we consider an alternative, alternative asset market. All those paper assets, the stocks, the bonds, the real estate you're going to see money start to come in. And this is going to be a long cycle. It's not all going to happen at once. But I think we're officially into the retail buyer in the US wanting to get back into gold and silver. And this has been a long time coming for stackers who have been really kind of waiting for this to have a sustained bull market in gold and silver since 2011. We had a little bit of a blip in 2016. That was short-lived. The pandemic in 2020, that lived on for 6, 7, 8 months, but it was short term. But now, given all the economic issues around the world, I think people are starting to rotate in. And it started with the central banks and them having a lot of friends. And of course, I run a gold business as well. And for me and my friends, we're starting to see the high end. I just went to a coin show here locally in Grapevine this weekend. It's the biggest one here in Dallas-Fort Worth. They do it about 6 times a year. And I talked to a lot of my friends and I'm like, what are you selling? And like, we're selling high end. We're selling numismatics, items with high premiums like the Silver Eagles. All of that stuff is starting to move. And in my experience, that is the higher end of the middle class buying the products that they want. And it usually happens before you have everybody else pile in. So I'm seeing a lot of good signs: Fed activity, gold sales, numismatic sales, a little bit of mining stock sales, and the chatter around these industries that people are interested. And when you get general interest is when those markets really run. So I think we're officially into that third and final phase of the major gold bull run that we were going to have in this phase. And last thing I wanted to say, as we were kind of talking before the program, I was looking at CNBC, and there were 2 reports of 2 separate Fed governors saying we didn't lower enough, we need to be more aggressive. So the Fed, certain members of the Fed are starting to get much more aggressive, and that is coming out into the news about the more aggressive members of the Fed wanting to cut more. And certainly the market wants it, the stocks want it, the bonds want it, the higher interest rates are killing bond owners because their face values are falling. And it's bad for the banks that hold all these bonds and their face values fall because those are assets on the books. And now you're starting to see that phase of the economy in which debt is no longer an asset. Debt is an albatross. And of course, that's going to eventually affect the banking system. So for a lot of people have been waiting since 2011 for what they see as the big boom in gold and silver. I think we're starting to actually see that now in real. And it's going to be sustainable for quite some time. Certainly, as long as the Fed's cutting interest rates, and certainly as we're seeing recessionary pressures around the world.
Yeah, I mean, I can agree with you to an extent, but I do see some retail interest, but it's still very, 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 very early on, especially when it
Agreed.
comes to
Yeah.
especially when it comes to the gold stocks. I think right now people are just now starting to warm up to the idea of investing in gold, let alone getting further out into the risk curve and buying gold stocks and things of that nature. Are there, vehicles like GDX and GDXJ and SIL? I mean, those may be on the menu, but individualized mining stocks, I think we're still a ways away from those markets lighting up. I mean, wouldn't you say that's the case too?
Yeah. And just looking at GDX, since you mentioned it, in the last year to date, since January 1st, they're up 108%. So it's doubled.
Yeah.
So it started the year at, I want to say 35, 34. Now it's at 73, 66. So I agree with you. It's generalist investment into ETFs, not much the individual mining stocks. But the fact that they're getting in is a sign, again, a confirmation that we're really in them. But I agree with you. We're very early. I think this gold market may run for 5 years. This is not going to be 2008 through 2011. There are too many problems in the world. And so we're not stopping at $4,000 gold. We may finally get that $10,000 gold price. I don't know. It depends on what happens with the dollar. I suspect the dollar is eventually going to crash and they're going to go to stable coins and cryptos. I've said that for years. That looks more and more like what is happening, especially in the Trump administration. They're getting more involved in gold. He did his meme coins. They're getting involved in stable coins. And I think that we're seeing the de-dollarization. So that's going to take a while. But I think that those economic problems that led to the problems with the dollar and led to the problems with the U.S. debt market is leading people into gold. And it started with central banks, and now it's the wealthier people, because like I said, it's the higher premium items. But I think you're going to start to see like the generic coins and bars move as well eventually. And also looking at what's going on around the world, there is a lot of movement around the world around resources to protect resources. So we're in commodity protectionism, and that will apply to the precious metals as well. So I fully expect that all of these countries are going to protect their commodities, and you're going to see higher prices in certain things. I think it will happen in some of the base metals. And this is going to be a very long-tailed, long-winded sort of market. But I don't expect that gold and silver are going to fall back hard anytime soon. There may be a correction. We've had a really long run in gold, honestly. It's going to technically correct at some point, but I don't think it stays down for long. I don't think we're going back anywhere around $3,000 gold. I think those days are over, and that may not come back for 6, 8, 10 years. So
Yeah.
I do think that we're in that cycle. We went through the original cycle of the central banks first, the big players. And I would say like just last week in our business, I saw probably twice as many orders as I see in a typical week. And now it's very early, but we're also signing up new dealers to come on board as well. So the business to business angle is happening. And a lot of the dealers some of them are established coin stores. Some of the dealers are new people saying, I want to get into this. And these are people that are truck drivers, restaurant owners, business owners that are looking at the opportunity in gold and saying, I want to get involved in that business. And again, it's very early stage, but it's starting to happen. And that's exciting because in the US, we're really bad about investing in gold unless we fear something's going wrong. It's very cyclical. It's not like that in other parts of the world. The Middle East are buying gold all the time. Russia and China buy gold all the time, not in the US. And so the fact that we're seeing this positivity is good. But like you said, it's very, very, very early.
Yeah. And you're starting to see some very early warning signs of people wanting to de-dollarize from an individual level. I mean, you and I were just talking about this off air, and I was kind of debating whether or not I wanted to bring this up, but I'm just going to go ahead and say it. And this might sound a little crazy, especially to some of the older audience, but what's really, you could see it in the trading cards. The trading card scene has begun to explode recently. Sports cards, trading card games like Magic the Gathering, Pokemon cards are up 1,000% in the aggregate in the last year or so. I mean, try getting this stuff in stores. It's mission impossible. So you're starting to see money look for avenues, look for avenues out of the dollar into things like collectibles, gold and silver, etc. Now, granted, trading cards are non-essential. So if the market ever does crash, I mean, they'll be one of the first things to sell off as well. But it's a telltale sign. It's a warning sign that you are starting to see capital try to allocate into different avenues outside of the dollar and bonds, out of these traditional safe haven plays.
You're correct. And we were talking about that before. It's interesting you say that because I listen to a lot of sports radio here in Dallas. I'm just a sports fan, always have been, played in high school. And I watch all the local Dallas sports. And they'll have segments on the sports channels about their card collecting and how they're going to all these big card, and I remember this being big when I was a kid, but that was 35 years ago. To see it come back, I'm kind of shocked. I thought it was dead because back when I collected sports cards, you had you had Topps, you had Donruss, you had Fleer, all these brands, and then it just died. And it seemed like it's been dead for a couple of decades. And you're right. Now you're having these massive card trading conferences pop up. You're hearing it, like I said, on sports radio. You can definitely see it on the auction sites.
I saw it with my own eyes, Rob. I was at a Collecticon the other week, which is like the big trading card convention, and I literally saw tens of thousands of dollars being traded for single cards.
Absolutely,
single cards. So there's so much money sloshing around in this sector. Now you have like people like Kevin O'Leary and other people starting ETFs and funds based around trading cards as well. So it's becoming. It looks like it's at very early stages of becoming a new asset class.
Yeah, I think people are hunting for yield. And to go back to the trading card for just one more second, I used to do online live auctions, not like eBay style, but you have these apps like on your phone. And it used to be small, and I used to do collector's coins, but all of a sudden the trading card market, anything that anybody thinks has value is exploding. And there's been two second and third versions of these companies pop up where now I've got 3 or 4 companies call me and say, hey, do you want to do live auctions now? And I like doing them, but they're trading everything, like everything. I mean, you've got people, clothing has come back, or you've got certain designers and they're exploding in value. You've got trading cards. I mean, you've got whatever collectible you can think of. People are doing auto parts like for old cars. It's insanity.
Yeah.
And you're right. And people are just seeking yield because inflation has destroyed people's budgets. One statistic that I read last week was, according to the government data, we went from 60, and this is the entire US population. This is the gravity of this statistic. We're talking all 360 million people of that subset of people that work, okay, which is a big chunk. Some are kids, but a big chunk work, over was 150 million or whatever. So of that chunk of all American working people, we went in 1 year, dating back to 1 year, last year to this year, 1 year period of time, it went from 63% of Americans were living paycheck to paycheck to 67. So 4% of the entire US population in 1 year is now struggling to pay their bills, where they cannot pay their bills in 1 year. And that's just the effects of the inflation of the last 2-3 years catching up in the supply chain and people suffering. And now we're starting to see inflation come back again. And the Fed came out last week and said, I know we have a dual mandate on inflation, but unemployment. But unemployment was so bad, they said, we're going to ignore inflation for now, and we're going to attack unemployment. So what does that mean when the Fed says that? It means they're going to print, baby, print. You're going to have more money sloshing around. It's eventually going to create more inflation. And what's going to happen is value of everything goes up, and people are going to speculate. They're going to speculate in mining stocks. They're going to speculate on trading cards. They're going to buy I've got a friend that wants to sell me her old 65 Mustang, because those are rising in value. Like everything is going up. And if the Fed continues this of supporting employment over inflation, you're going to see this continue. And one of the reasons why they're doing that, by the way, is something I want to talk about to kind of take it a different direction for just a second. The BLS came out and did their biggest revision in the history of 900,011 jobs that they subtracted over the last 2 years. They said, well, we kind of screwed up with the last 2 years and we created 1 million less jobs than we thought. And that dwarfed the other biggest correction they've ever had. So the BLS is having severe issues, even understanding what employment is, and their numbers are off. And you're seeing these huge seasonal adjustments, bigger than we've ever seen before, because their system is flawed. It doesn't work. It doesn't work. So the situation is more dire in the US than people know. And so, yes, people are yield seeking. They're desperate. They need to pay their rent. It's not just about making money. People are, first it was a gig economy, and now people are speculating because they're desperate. Like, what else are they going to do? The jobs aren't there. They got to find a way to make money. The problem is, if the jobs keep going down, there's going to be less people to buy some of this stuff. So like you said, if we get deeper into a recession, like trading cards and things may not hold their value, whereas gold and silver may. So it's up to people to have discernment about what they want to invest in, and what's going to hold its value over the next few years. But what you're reporting to me does not surprise me at all.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
Yeah, I believe we saw similar things at the tail end of the Weimar Republic, is that when everything started going up in value, collectibles, anything tangible, essentials, non-essentials, it didn't matter. But the stock market went up to new all-time highs. But when you priced it in gold, it was actually down. And I'm not saying we're heading into hyperinflation or anything like that, but certainly some representation of that, to a much lesser degree, is occurring right now. Now,
Yeah.
Go ahead.
Money's losing its value. It's very clear, and people are going to other things. That's the lesson to take away.
Right. If you had like 100 grand, let's do a thought experiment. If you had 100 grand and you had to allocate it percentage wise, what would kind of like be your percent allocation, given, the sectors involved?
So first thing is I always recommend people buy off their debt unless it's like 0% interest rate debt.
Mm.
But if you're just talking about investment, I'm so predictable. I'll say gold and silver, and I'll say gold because even though gold's expensive, it is the thing over the longest period of time that's held its value the best, bar none. Silver tends to be more volatile. It can pay off, but it's more speculative. Silver has a very speculative side to it, more so than gold. So I would do a bunch in a gold and silver. That's just me. And then I might go into doing certain businesses. I think because of the recession, certain businesses are going to do well. So certain businesses around prepper items is going to do well. Certain businesses around key items like clothing and food, I think, are going to do well. Certain key assets that people need or things that go into making assets. Despite what a lot of people think, I don't think oil is going to crash and never come back. I think it's going to do fairly well. And I think a lot of the energy metals are going to do well because there's so much demand in the emerging market that I'm still bullish about copper, uranium, and those things, although those might be slightly longer term. Because when you have a recession, they'll go down and then they'll come back up. But I think they're going to come roaring up. So I would start looking at early stage investment in other commodities because gold and silver pops and then the rest of the commodity cycle comes after. And so I would look at some cheap maybe assets in early stage commodities if you have a longer term time frame and maybe break off, I personally would break off 10 or 20% and go into some of those. And then the other stuff would be stuff that I feel like is going to do well more in the immediate term, gold and silver, prepper items, food, water, that kind of thing. And people think I'm nuts, but I will tell you that when I go to church, they're talking about prepping. When I go to lunch with my friends, they're talking about prepping. People are bringing back the old, my parents grew up during the Great Depression. They're bringing back the old, how do we eat cheaply on a budget for our family? And how do we save a little? Those conversations are coming back as well. So I think that market, in fact, if you look at people that store ready to eat meals, that business has absolutely gone bonkers. And I think other thing people need to pay attention to, just from a real sense, you may be an investor with a lot of money, but I would also pay attention to things that you need. And I would make sure that you have access to those because we saw last time what happened was we had supply chain issues. So also pay attention to either how you get your items or how you can solve those issues. If you can get creative and you can get people items that they need, you could have a raging side gig business. And I'm seeing people do it. It's popping up on the auction sites. So people are really savvy. I went and talked to coin collectors at the coin show and they're branching off on other things. They're like, well, this aspect and that, so it's kind of, pick your poison. I'm more the metals and I'm on other things that people will need, the staples, the groceries, the clothing, stuff like that. But there will be business ideas that come out of this that could really help people. You're offering a service that people need that, that get an item that they may have access to because, what happens when businesses fail and certain things aren't available. So I think that people that store auto parts, I think if you're in the wrecker business, you can make some money, or if you're in the auto parts business, because people are going back to used. In fact, people aren't buying as many new cars as they're keeping their used ones longer. It means the parts business and auto is going to do well. That's a little niche that's actually doing pretty well. So there are little niches like that you can look at and kind of find your way. But I'm not getting big into any particular type of real estate. One other thing I would say is in real world assets, RWAs, tokenizing those. I think tokenizing is a way that's going to unlock some of the younger generations putting all that money into those exchanges. Whereas if they want to diversify away from Bitcoin, you're going to get into people that have tokenized, I don't know, land or a miner or tea or whatever asset you can have. And then people are going to start speculating that. I think a lot of money is sloshing around in these online exchanges and people are wanting to diversify into real goods that are tokenized so that they don't have to store them. And you could even possibly see tokenized gold and silver. A lot of companies are doing tokenized gold and silver and you store it. And so that's become popular, but I think that's going to extend out to other assets in the economy as well. So I think there's a whole bunch of opportunities for people that are, and I'm giving ideas on purpose. I'm giving like 10 different ideas for people to explore because I want people to do that. Don't just depend on your job. Don't just depend on your current income source, and don't just buy gold and silver. Give yourself another way to, one, make extra money and also solve a problem in the economy. And I think I'm being very serious about this, Danny. Like I said, I grew up with parents. My father fought in World War II. He was in D-Day, 7th Naval Battalion, 2nd Landing. And my mother grew up during the Great Depression. Okay. And I was the surprise baby. That's how, I'm so young when they were lived during those times. But I remember the lessons of what happens during those times. And you have to get very practical. It's not just about investment. It's about being practical with what you have and how you address what I think is going to be an extended recession going into maybe a depression. And I think people need to pay attention to that as well. Just make sure you're protecting yourself and that you paid off debt and you have the money that you need. Sometimes paying off that debt and becoming efficient is worth more than an immediate investment. Okay, if that makes sense. So I think all of these ideas need to come into play for people because it's real and it's here and it's real and we're seeing it. And, we were talking about gold going up 40% this year. I gave you the statistic before we came on. Gold went up 40% this year. That's the most since 1979. What did we have in 1979? The highest inflation I think we've ever experienced in the last 40, 50 years. And everybody remembers what happened when Volcker had to raise interest rates. What was it, like 20% or 21 to stop that rampant inflation. And everybody remembers how expensive things. If you try to buy a house back then, you're at 18% interest rate. It's insanity. So making practical decisions around your life and being efficient can often be some of the biggest return that you get. And I think people need to look realistically at making those decisions.
Yeah. Well, you look at what they did with interest rates. You mentioned interest rate. They cut a whopping 25 basis points last week.
Mm-hmm.
And what did the 10-year and 30-year yield do?
Mm-hmm.
Went up.
Yep.
Which is similar to what happened last year. They cut interest rates by 100 basis points.
Mm-hmm.
The yield did not budge. It actually went up. So the bond vigilantes are essentially not buying into the Feds and the government's.
They're running in monetary policy is running into a dead end, and fiscal policy is adding trillions of dollars over the next few years. That's a bad situation. Fiscal policy adding trillions of dollars, monetary policy is failing. At some point, that equals crash. Okay, so, and yes, you're right. The bond guys aren't buying it. And the Fed now is buying more of our debt than ever. And there was a report out last week, and I forgot who, I read it on Zero Hedge, another Zero Hedge story. One of the major analysts said that the Fed stopped buying even $1 of the debt they were buying, it would start a cascade. So the Fed cannot stop buying right now. And so the Fed is going to buy and they're going to lower interest rates. And even though we're not officially in a recession, the Fed is acting like we're in a recession. So take your cue from the Fed and know where we're going. It's important for people to understand that. And you're going to see that hit stocks eventually. Stocks will take a while. Stocks and real estate will have issues after bonds typically. And I think you're starting to see some weakness in certain areas, although people are still bullish on the FANG stocks and are still bullish on some real estate. But I'm in some private real estate investment groups and they're panicking. Some of their commercial investments are not doing so hot. And all the projections they made about how much money they're going to make over the next 5 years, they making them because prices are going whoop. And rents are starting to fall for the first time in a long time. So again, a lot of those traditional investments are screaming recession. The Fed is telling you without telling you what's really going on. And there's a cliff coming when you're spending too much and the money you're printing does not cover as much because of inflation and nobody's buying your bonds and the central bank is monetizing it. That's where you get into a Weimar scenario. And we want to avoid that, right? But that's the scenario we're starting to get into. We're in that stage of the life cycle. And it's something that people really should pay attention to the warning signs. It takes the thing is, people are like, well, I had no idea this recession was coming. Well, yeah, you did. If you watch Danny's program on CapitalCosm, I'm going to be talking about it for forever. Watch YouTube. It'll tell you the real story. Just watch it. And that's where we are. So make your preparations accordingly.
Yeah. Well, on that note, Rob, I can't think of a better way to wrap things up here, unless there's anything else you want to talk about before we sign off here.
Well, I think going to the end of the year, the one thing I'll say, and one thing I said to people, where the gold price goes and the economy goes depends on Q4, because this is where companies make their money. And if the consumer's not spending 72% of the economy, you'll know it in those reports. And if the consumers don't spend this year, you're going to have a lot of bankruptcies and that kind of thing, foreclosures. You're going to start to see the nasty stuff come out in the reports in the spring. So pay attention to consumer spending. If there's one statistic you want to follow beyond bond rates and interest rates and what the Fed does, it's consumer spending in the fourth quarter. It will tell you what's going to happen in the next year. And the consumer spending is not positive in the fourth quarter and it retracts into negative territory. I don't care what the government says. We're in recession. Make your plans accordingly. Follow that. That will be the key statistic for the last 3 months of the year.
Understood. Well, Rob, where can people find you if they want to see more of your work?
Just Freedom Report out on YouTube and on Twitter. And pretty soon I'll be announcing on my channel I'm starting a Substack. I'm going to write again for those that have loved my writing for years. I wrote for Seeking Alpha, I think, for 10 or 12 years. I'm bringing that back. And I'll be honest with you, because a lot of the social media isn't going to like the content I'm going to write about. I'm going to get very serious in some of my writing. So if you're interested in my early writings and what I was doing back then, I'm bringing that back on Substack. I'll announce that on my channel soon. And you're going to get insights there that I can't put on social media because they're not going to let me, but you'll get them on the Substack. So stay tuned for that as well.
Excellent. We will have the link to your YouTube channel down below. And I look forward to seeing your Substack when it's live, Rob. So as soon as that's live, we can have you back on, promote that, get a special link down below as well. Thank you so much for coming on, my friend. Guys, if you enjoyed this podcast, drop us a like, comment, go Rob, go in the comment section if you agreed or disagreed. Either way, let me know your thoughts, because I, in fact, do read all the comments. So good or bad. So in addition, subscribe to the channel so you don't miss an episode. And by liking, subscribing, commenting, doing all the YouTube stuff that we always tell you to do, you in fact help boost this video, this channel, and this message in the algorithm. So if you'd like to support us, you could do it that way. And it may not seem like much, but a little bit does go a long way, and it's free. And if you'd like to take it up a notch, you can become a paying member to my Substack. It's $8 a month, $80 annually. And you'll get all of my content early, ad-free, and uncensored for the videos that warrant it, in addition to asking my guests questions that you want read on the air, and so much more. So thank you guys for your time, and I will catch you later. Bye.